Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The financial world is waiting for Fed boss Powell's Jackson Hole scene-setting speech. In the meantime, US initial jobless claims held steady last week from the prior week at 195,000. But in fact, seasonal factors should have produced a good fall. So seasonally adjusted, they're reporting an unexpected rise. The number of people on these benefits held at 1.97 million when they usually retreat at this time of year. Analysts are flagging concerns about the lack of progress. A year ago, they fell to 1.86 million, so they're 110,000 higher now than then. And US existing home sales rose and by more than expected in July, and only the second month-on-month gain of 2025. They ran at the rate of 4 million per year, the best level since February. However, the stock of unsold homes swelled to 19 weeks of supply, and the latest sales came in with average selling prices dropping, now at $422,400. More generally, around their overnight earnings release, the Walmart CEO said that tariff tax price pressures is now driving up prices on a weekly basis. However, they reckon they'll get a net benefit as shoppers turn to them from others, forced into even higher increases. And the Conference Board's index of leading indicators in the US fell in July, extending its 2025 retreat and at a faster pace in the past 6 months than in the prior 6 months. Keeping the pressure on this index are the retreats in new orders and weak consumer sentiment. And the Philly Fed's factory survey certainly shows the new order problem, which turned negative in August there. And firms there report that inflation is embedding at higher levels in their input costs. There is a sense that this heartland manufacturing region is starting to go backwards again. Those in this survey expected growth in the future, but they've been signalling that for all of 2025. And if that aspect doesn't turn, things will possibly feel a bit grim there. But the early August S&P Global Market PMIs for the US are not downbeat. On the factory side, they report a good recovery from July. On the services side, a slip from a still expanding base, though. They also report faster input inflation as they paid the tariff taxes. And Canadians are also reporting rising input costs in their PPI release overnight. Japanese business, though, is on the rise. Business activity across Japan's private sector expanded at a faster rate since February, midway through the third quarter, according to the August PMI survey data. The upturn was supported by a fresh increase in factory production, alongside a further solid rise at service providers. Total new business also expanded at its fastest rate in 6 months, although this was driven solely by the services sector. New export business fell at a steeper rate, however. In China, it is becoming clearer that officials are increasingly worried about strained finances at central and local government agencies, and that both firms and employees are suffering from delayed payments from them. Apparently, the pressures are severe, warranting President Xi's attention. Special bond issues are underway to juice up the necessary funding. In Europe, the flash PMI reports there indicate an improving situation for both manufacturers and in the services sector. New orders increased for the first time in 15 months in August. The factory PMI rose to an expansion and its best in more than 3 years. Its services sector expanded faster, although like everything in Europe, the benchmarks are not high compared to the rest of the world. Overall, EU consumer sentiment held at modest levels in August, although to be direct, they are still substantially negative and remain lower than their long-run average. In Australia, the S&P Global Market August PMIs are quite upbeat. They said Australia's business activity growth accelerated midway through the third quarter, with faster expansions across both the manufacturing and services sectors. This was supported by higher new work inflows, including renewed expansion in exports. In turn, Australian private sector firms raised their staffing levels at a faster rate to cope with the additional workloads. Business sentiment also improved slightly from July. And Australian consumer inflation expectations fell to 3.9% in August from 4.7% in July, easing for the second straight month and marking the lowest level since March. And the Australian Energy Regulator says more wind, solar and storage capacity was added over the past year to the electricity grid in Queensland, New South Wales and Victoria than in any year before. The risk of blackouts and service disruptions is fading, they say. Globally, container shipping freight rates fell 4% last week from the prior week to be 60% lower than year-ago levels, although year-ago levels there was an extensive stress from tensions in the Red Sea. All the weakness currently is in outbound cargoes from China. Bulk cargo freight rates fell 5% over the past week, but they're still 10% higher than year-ago levels. The US Treasury 10-year yield is now at 4.33%, up 4 basis points from yesterday at this time. But the price of gold will start today at $3,337 an ounce, down $10 from yesterday. However, American oil prices have risen $1 to be just under $63.50 a barrel, while the international Brent price is just over $67.50 a barrel. And the Kiwi dollar is now at 58.2 US cents and down 10 basis points from yesterday. Against the Aussie, we've held at 90.6 Australian cents. Against the euro, we're up 10 basis points at 50.1 euro cents. That all means our trade-weighted index starts today at just on 66.2 and up 10 basis points, and also held by a gain against the yen. And the Bitcoin price starts today at $114,270 and essentially unchanged from this time yesterday. Volatility over the past 24 hours has been modest, just on plus or minus 1.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.